Hey there, Instagram. Hey there, hey there, hey there. Hopefully everybody is having an amazing day on this Thursday afternoon. I am going to let Instagram go on out there and find some of you guys. And as they are doing so, I want to go ahead and introduce myself because I have a guest coming on, Khadija, and she and I are going to be talking about structuring your business. Is your business actually structured? The business formation, is it the right foundation or the right structure? Let me say that. Are you structured correctly as a corporation? Are you structured correctly as an S corporation? As an S corporation, it is an election, you all. It is just not something that you say, I'm going to become. You have to apply with the Internal Revenue Service to be elected. And if you are a limited liability corporation, are you set up correctly? And I literally just got off the line with someone, and it wasn't the fact that she was not set up correctly, but the problem was her previous preparer did not file the appropriate tax return. You see, in the state of California, with the Franchise Tax Board, if you are a limited liability corporation, there is a Form 568 that we have to complete if we are a limited liability corporation. So we want to make sure, as we have this conversation with you today, we want to make sure that you are set up for success. That is our ultimate goal, is to make sure that you are set up for success. Nothing hurts my heart to see someone have to go back 3 years, sometimes 4, and do a correction based upon what someone else has done. You see, I tell you guys all the time, you guys got to make sure that you are going to a qualified preparer, because there is no reason why someone should not include the correct tax forms when they are doing your tax document. Okay. So hello, Stephen. Hello, Kim Jones speaks. Hello, Miss Tabitha 1523. Hello to all of you guys. Listen, I want to go ahead and bring up my guest, and as she's coming in the room, Khadija, let me go ahead and just introduce myself before I continue to tell you guys about these structuring your organization. But I am Dr. Cozette M, America's #1 tax and accounting strategist. I work with my CPAs, my enrolled agents, as well as my tax professionals to help you all grow, scale, and leverage in your firm. You know, oftentimes I hear my tax professionals, my CPAs and EAs say they don't know how to market, or they're struggling with their marketing efforts. Let me see. Did you have trouble? Trouble, Khadija? I tagged you in. I don't know. See if we can redo that. But having trouble with the marketing. And see, what I do know about our marketing, you all, is if we are not talking to our ideal client, and we are not speaking to them directly, then our marketing probably is off. That means our messaging is off because we're not speaking directly to our ideal client. And if our messaging is off, then that means that our conversion rate is off because we're not converting and working with those that we truly want to. Okay? So oftentimes you guys talk to me about pricing. You say that you don't believe that you are being paid what you are worth, or your clients are haggling you for amount. Well, we need to work on our pricing. And then last but not least, several of you say to me that you want to expand your service base. That's an easy one. We need to get you into some education. We are an IRS continuing education provider. So if you are looking to increase your skill set with 1120S's, 1120 nonprofit partnerships, all you got to do is just click one of the links up above to find out a little bit about our courses, the Tax Curative Lab, and or the Tax Curative Institute. The lab is our Facebook group, and we can see about getting you structured. But I wonder where my guest is. What happened? Oh, there she go again. Okay. Jumping in, and we're going to talk about structuring your organization and making sure you are set up for success. Okay, there you go. You coming in. Hey, how's it going?
I'm doing well. How are you?
I'm doing pretty good. I'm well. Where are you at, by the way?
I'm in Philadelphia.
Oh, Philly. Okay, and I'm here in California, so good vibes.
Yeah,
So why don't you go ahead, tell the viewers all about who you are, what you do. You know, we both kind of service the same clientele probably, but just give them a little bit of background about your history, who you
I'm
are.
absolutely. Well, first, thank you for inviting me to be on this segment. I really appreciate it. I'm super excited to
Yeah.
talk business structures and more importantly, the taxation of business structures. Because what I find is that people don't understand whether the income is going to be on their tax return or separate tax return. So I'm excited to break that down for people today. But just a little bit of background about myself. Today's actually a pretty exciting day because yesterday marked 1 year of full-time entrepreneurship for me. So I'm super excited about that. I've been a full-time entrepreneur for a year, running my business full-time for a year. Prior to that, I worked on Wall Street. Left Wall Street last year, been doing this full time. I have a team of 4 of us. One person is based in New York, and everyone else here is in Philly, and we do tax prep and bookkeeping for small businesses and individuals. We have fun. We love to serve our people. I've really been enjoying the opportunity to create a space for people that look like me to talk about finances, to talk about their businesses and building businesses. It's been a fun, awesome time. But yeah, that's me. I didn't mention I am a CPA. So yeah, that's me.
All right, so real quick, I know what a CPA is. Can you share with the people what a CPA is? Because you know, there's this thing out there that people will call the office and say, "Are you a CPA?" Well, there is a difference, you all, but I'm going to let the CPA share what exactly it is because oftentimes I'll get that all the time. Are you a CPA? Are you not a CPA? I need a CPA. I need someone to sign off on these documents. I need someone to audit. But I'm gonna let her tell you guys because my experience is very broad.
Yeah. So CPA, layman's term, certified public accountant, and that is a designation by actually like the state. So I am licensed by the state of New York to be a certified public accountant, and what that allows me to do, tax perspective, is really talk to the IRS on people's behalf without me having to have prepared the return. I can get power of attorney for individuals. But really, as a CPA, I specialize and I'm an expert in tax prep. And because of my designation, I'm required to stay up to date with training, stay up to date with all the new things that are happening out there. And most importantly to me is I'm held accountable to something that's larger to myself. So I am constantly making sure that all of the things that we're doing are done ethically, and constantly learning how to do things. So I would say if anyone is interested in becoming a CPA or looking for a CPA, make sure that you're going to the CPA that specializes in what it is that you want. So CPA specialize in all sorts of things. You have CPAs that are focusing on audits. You have CPAs that are focusing on just financial strategy. You have CPAs that are focusing on taxes. So don't just call your friend because you hear that CPA and maybe they work in Big Four accounting and they're auditing. They will not be able to help you prepare a tax return. So it's important to know that there's different sectors that CPAs specialize in. And then to become a CPA, you got to pass a lot of hard exams in a small amount of time. And there's not many of us out there that look like me. So it was an exciting time for me. Once I finally passed it, I felt like it was a win for not just me, but for so many other people as well.
That is so true. Everything she said. And one thing that I do want to expand upon, based upon everything she said, is that when we think about a CPA, CPAs are licensed within a state. So they are recognized on a state level. And when we think about an enrolled agent, they're recognized on a federal level. So there are two different distinctions there. And what I mean by that is, yes, she can represent you. She's going to represent you before the Internal Revenue Service. An enrolled agent can also represent you, but they're doing it on a federal level. So there is some distinguishing factors amongst two. But as she stated, and I'm going to say it all the time, inspect what you expect. Vet these individuals out, you guys. There's a list that comes out from the IRS, and it came out this week. It was 8 people on that list who was banned from doing anything with the IRS. because of fraudulent activity. So whatever you
Um,
do, you need to vet who you are working with. I just got off the phone with another young lady. Her tax preparer, in my words, jack that return up. So I don't care what alphabets they have behind their name. And I'm being real honest, you guys, and very transparent. You have got to vet these individuals to ensure that they are who they say they are and that they are reputable individuals. Check Better Business Bureau. Vet them out with the IRS. See if they're registered with the IRS. In my state of California, go to ctech.org to determine if someone is actually true and who they say they are. We have a lot of ghost preparers out there and people come and go. So just vet individuals out. All
yeah.
right. So listen, we want to make sure that you guys are doing the right thing. You're not commingling your money. You're not saying you a business person, but you filing a personal return, or you say you a S corporation and you don't know you're supposed to get a K1, or you say you're a limited liability and you don't even realize that that's a return or a schedule that is filed with your federal 1040. You think it's something separate. So we're going to break it down to you right now. You ready?
Yeah, that's
Go ahead. The floor is yours. The floor is yours.
And they'll say, hey, Khadija, I did my personal taxes. Can you do my business taxes for me now? I'm like, oh, baby, we got to amend that.
Yes.
Because if you remember LLC, they are the same thing. So there are a few different business structures out there that are legal business structures, and then we have some structures that have specific tax designation. So Dr. Cozette already talked about an S corp, right? Like that's the hot topic. That's popular. Everybody on Instagram is like, become an S corp, become an S corp, become an S corp. And I have people call me and they're like, hey, Khadija, I wanna open up an S corp. And I'm like, I don't think that's what you want to do. I think you want to open up a business and you want to elect to be taxed as an S corp. So if we break it down very basic for you, I'm gonna start with one, not even a legal structure, just someone doing business. Because one thing that I'm finding as I am gaining exposure to new people, meeting new business owners on a daily basis these days, especially since it's tax season, is that there's this huge misconception that you have to be an LLC before you can report any of your income or expenses on your tax return. The IRS does not care about your tax designation when it comes to you reporting that income and them getting their tax money off of it. As long as you are doing something that is making you money, the expectation is that you are reporting it on your tax return. So let's start.
I like to say, Khadija, is that like everybody walking out here is truly a business owner, because all they really need is their social security number and have some money, some income from a business. So we're all business owners, whether we believe it or not, if we think about it logically and break it down.
We're all business owners. My cousin braided my hair, right? She don't have no LLC, but I paid her for it. So like, she's a business owner. She's running the business. She had to buy supplies in order to be able to do my hair, the edge control, the gel, the combs. She's a business owner. So I think that like, that's probably one of the biggest misconceptions in our community, is that like, you're not running the business unless you have that legal structure that's tied to the state. And you becoming an LLC, that's a legal thing. The IRS literally looks at single member LLCs as disregarded entities. And what that means is that when you are the only owner of your LLC, the IRS considers you and your LLC to be the same exact person. So what they expect is that the income that you're making on your business, just like Dr. Cozette said, will be on your personal tax return. So don't come to me after you already filed your personal taxes and say, hey, Khadija, can you help me with my business taxes now? Because we are going to have to amend it and add that information onto your personal tax return. We do that, like Dr. Cozette mentioned, through a form called the Schedule C. The Schedule C is a schedule where we pretty much state all of your profit, your business income and loss, and ultimately the profit to the IRS. And it flows right through to that first page of the 1040, and it adds or subtracts from your other income and helps us determine what your taxable income is. So I'll start there. I'll stop there. Any questions regarding single member LLC, how it's taxed, understanding that is text with you as an individual?
Yeah, I just dropped that in there. If you guys have questions, please take a moment. We don't want to just talk. We want to make sure that this is very interactive. We want you guys to ask whatever questions you have. Now, I do have a question because there's this misconception. At what threshold do I have to report the income as a business?
Yeah, that's a really great question. And I get this all the time. The legal threshold is any profit over $400 you have to report on your tax return. And the reason is some people may think like, well, the standard deduction is 12,500 or 12,950, so I shouldn't have to report it. You don't have to pay income taxes on it. But you are, as a business owner, you are an employee and an employer, and the IRS wants you to pay employment taxes. So anything over $400, you have to pay employment taxes on. So you should be reporting that on your tax return. So what you should do is make sure that you're consulting with a tax professional all the time. Like people ask me, Khadija, I just started my business. At what point should I get an accountant? Now, because we know what you need to know, and there won't be any guessing for you. And sometimes people will try and take losses for so many years and don't realize that, like, you take too many losses, the IRS might call you and they say, this looks like a hobby. And now you can never write off those expenses again, and we still expect you to report the income.
Yes.
So even if
Yes.
the business and you didn't hit that $400 threshold, you want to be careful about the years that you are writing off those losses as well, because they can impact you later down the line, especially if your goal is to grow a big flourishing business.
Well, not only that, the flourishing business, you need to also take into consideration that what if you are planning to purchase a home? What if you are planning to purchase some large vehicle or automobile? What if you are planning to refinance on your home and the mortgage company or the lender says, can I get a copy of your return? Now, let's look at it logically. You're trying to reduce your tax liability by writing off all of the expenses. You just toss it in. You find in receipts from your personal stuff and put it in on your business stuff. Y'all know what I'm talking about, right? Mm-hmm. But when it's time to refinance, and they ask for a copy of the tax return, you're thinking, well, I made all this money. But what happens is the financing company is going to look at that bottom line, that net income, and when they see that it's a red, brackets around it, a negative, a loss, how much can you qualify for? You cannot qualify because you just put on your tax return that you had a net loss of $15,000, $3,000, whatever the case is. I don't care how large, how small. It hurts you in the long run. It's not going to help you if you go to refinance or finance for that matter. So talk to someone in advance. Talk to a professional that can help you with long-term planning, mm-hmm. short-term and long-term planning. And I know you guys hear us say this all the time. Tax planning is important, and you need to be proactive versus reactive. It's in instances just like what Khadija and I are talking about. You need to learn to be a forward thinker and not worry about what the past has happened. The past right. happened. We can't go back and change your return to get you refined. Yeah, we could, but you would be lying probably. Let's just keep it real. We'd be lying if we went back and amended a return just so that you could get a home. And guess what? Once you re-amend, it's just a spiral effect, you guys. Let's just do it right from the first.
Yeah, and jump out the gate. Point so much, because one thing that I really encourage people to do is be wary of tax professionals who are only interested in reducing your tax liability without understanding all of your goals. Just because I know about everything that you are eligible for doesn't mean it's important for me to know what your goals are too, so that I'm not impacting, like, yeah, I saved you a couple $1,000s during tax time, but now you can't get that $200,000 loan that's going to make you 3 times that in the long run, So be wary of tax professionals who are only focused on getting you write-offs, and they don't really put together, or they're not thoughtful about what your goals are short and long term.
So let's talk about the shift, because I was on a live the other day and the individual said that she educates her business owners to start off as an S corp. So let's talk about that for a second. Of course, you guys, we hear it on TikTok. We got TikTok University. We have YouTube University. We have all of these individuals that are specialists on setting you up with your business formation. Is an S corp the right thing to do for a brand new business owner? And if it is, what are some of the pros and the cons? What would you tell someone? I know what I would tell someone, but if you guys are out there and you're listening to individuals off of TikTok and social media in general, and they're giving you bits and pieces of information, just enough to tease you, you know, they throwing the fish out there and they're about to reel you in, but they haven't told you the pros, the cons, what you're in for. Because what I do know, and Khadija will back me up on this, I'm sure, when you come in as an S corp, baby, you playing with the big league.
You paying, and you paying money. Like,
Exactly.
it's expensive. It's expensive. So absolutely, I think that people, they're so focused. Unfortunately, I think we're in the culture now where people are so focused on writing off items that they're not focused enough on making money. And it's like, you want all these tax, you want to buy this G-Wagon so you can write it off, but I need you focused on actually making money so that the write-off makes sense. So just to give people a little bit of background about why people push this whole S corp thing, or even if I back it up even more, what is an S corp? An S corp is not a legal structure. It is a tax designation. It's a tax election. So once you become a business, whether you choose to be an LLC, a corporation, a partnership, you have the opportunity to call up the IRS, well, really fax up the IRS, because most times you faxing over the letter, and you ask them for permission to be taxed as an S corp. And so yeah, at its very basis, it's a tax designation, and it impacts the way that your business is taxed. So when you're a single member LLC, remember I said all of the income is reported on your personal tax return. There's just one tax return. As an S corp, it's kind of similar in the sense that it's a pass-through entity. So all of the income is still reported on your personal tax return, just in a different way. And instead of one tax return, there's two. So you have to file an 1120S, which is specifically for the business, and it's an information return. There is no tax fee at this time, and it's pretty much, hey IRS, I have this business. Here's a list of all the owners. Here's how much we made. Here's how much we spent. So you should expect to see this profit amount on each of our personal tax returns. So it's for informational basis only. The reason why the TikTok gurus and the Instagram professors are out here telling you all to do S corps is because it helps you save on employment taxes. So I mentioned earlier, when you are a business owner, you are the employer and the employee. So you have to pay all of the employment taxes. And employment taxes isn't something that's just for business owners. You pay employment taxes as an employee at your job. So when you look at your W-2, there's like three lines. There's 3 lines in the corner over there somewhere, and 2 of those lines are employment taxes. You pay half of it, and your employer pays the other half of it. But when you're a business owner, you're both the employer and the employee, so you have to pay both halves, all of it, and that's like about 15.9, 15.6 something percent. So when you are single member LLC, all of your profits are taxed, this additional employment tax. So people are suggesting that you become an S corp so that you can shift how your income looks as a business and only tax a portion of that income with the employment tax. So what people don't tell you is that what people don't share is that it doesn't eliminate this self-employment tax. It just reduces it. And one thing that people don't share is that once you become an S corp, it becomes a lot more expensive for you to operate your business. So you have to make sure that your tax savings are great enough to cover the expenses that you now have in order to operate as an S corp. Some of those increased expenses are there's 2 tax returns now, and what people are charging for the S corp return, people are charging money for that. So you're being charged for your S corp tax return. You're also being charged for your personal tax return now. So that's 2 tax returns, a lot more money than if you were just a single member LLC. You also now have to pay yourself on a payroll. So that means either what I would suggest is signing up with a payroll provider. So that's you now paying monthly payroll fees to get payroll provider and making sure that they're filing your tax returns quarterly. So you now have quarterly tax returns that you have to file, not just quarterly income taxes, because that's a conversation for a whole nother live. These are just payroll taxes that are done quarterly. So it just makes things a lot more expensive. So to suggest that someone out the gate become an S corp without explaining to them some of the expenses that come along with it, I think is very irresponsible. Because you just made $1,000, so I saved you $150, but now I got to charge you quadruple that just to prepare the tax return, and that doesn't even include any of the other payroll stuff that comes along with it. So I think that there's income thresholds before you consider making that change, and you should definitely discuss with the tax professional what that income level is that they suggest before you make that switch over.
Right. And you also, another expense that's in there is just the setup fee to get you set up with as an S corporation. So it's a lot of, it's the startup fees to get you established, or elected is the correct terminology, to get you elected with the Internal Revenue Service, not to mention all the other fees that come along with it. You got to make sure that you have the reasonable compensation. You have to make sure that a lot of things are in place. You have to have your meetings, documentation of those meetings, a lot of things, you guys. So when you say that you are a business owner, you got to take the responsibility, not the financial responsibility of it, and just make sure that you're dotting your I's and crossing your T's, because the one thing that you do not want to happen is you don't want the IRS to say, okay, we've granted you this election to be taxed as a S corporation, and then they determine that you are not abiding by reasonable compensation and a whole bunch of other things, and then you are that an entity, that election is taken away from you. That's what you do not want. And then even if you decide this is not what I want, I don't know why I was listening to TikTok Professor, you can go backwards, but they're going to put I don't want to say a sanction, but they're going to say that you cannot become an S corporation for, I think, is it 3, 4, 5 years?
I think it's either 3 or 5. Both of them, I'm feeling it in my gut. I think it's 3.
And I was going to say 5. I think it is 3. So if someone's I think it's 3 or 5, but whatever the case is, that you can't become an S corp again. There's a waiting period, a holding period before the Internal Revenue Service will look at you again and say, okay, are you serious this time? All right, we're going to let you in again. So think about all of that, you guys. There's repercussions.
And Dr. That while we're talking about waiting periods, also I want people to know that when you send that letter off to the IRS, you might be waiting like months and months and months before they even let you know if you were elected for it. So if you sent in an election and you haven't heard back yet, that is normal. They are like very backed up. So it's so much waiting with the IRS period.
Yes. I think when I did it, it took serious, you guys. I think I did it March 15th, and I didn't get notification until the middle of January of the next year. So that tells you. So when you're telling us, can you log on? Can you find out? No, you can do it. But I'm telling you, you don't even have to worry. You will get a letter in the mail, and it's usually how the Internal Revenue Service works is, I say they wait till the last minute to get everything done. And, probably around November, December, January, staff begins to pick up, they go do what they need to do. The letters began to start coming out. and you'll know that you are an S corporation. So it does take a while. It's not like you send it in March 15th, and it's not like you owe them money. They're not coming after you. They're gonna take a minute.
They pick up when you're trying to make a payment arrangement, but any other thing, ever.
So, speaking of that, you all, let's talk about what's the deadline. We kind of already gave it to you.
Good question. Great point. So when you are a partnership, so if you have an LLC and there are multiple people who are the owners of the LLC or an S Corp, your deadline is around the corner, March 15th. And the reason is because we have to pay ones to each of the owners so that they can then prepare their personal tax return. So S Corps and partnerships, they are due March 15th, and then your personal returns and corporations, those are due April 18th, a month after the S Corp.
Now, if I want to elect, when do I have? My time is almost up. Like what?
That is true. Oh, the election, duh. So the election, March 15th as well. So the rule is, I believe it's 2 months and 15 days from the tax year that you wanted to be eligible for. So if you wanted to go into effect tax year 2023, you have until March 15th to fax over that letter to the IRS. If you start your business the middle of the year, you have 2 months and 15 days from the day you start your business to send the letter over to the IRS. And if you decide, which you probably will decide later on in years to come, because remember, you don't have to make the designation right away. It's that March 15th in the year you want it to go into.
Right. And so another thing I want you guys to take into consideration is March 15th is just around the corner. It's less than 2 weeks away. If you do not file your S corporation on time, there are penalties that you will be hit with, and it is a penalty per member, per partner, per shareholder, per member, that you will be hit with. And that fee, I believe, is $240 per month.
Per month.
Per
yeah.
month, per member, per partner. Okay. So if it's 3 of you guys and you're 6 months late, that's going to equate to approximately $4,000. I don't know about you guys, but if you're a small business owners, that's $4,000 could be split amongst the partners, and it could go towards the 401k or something of that nature. Okay, it could go towards a lot. It could go towards marketing. It could go towards something that your business needs. It could go to the reserve. Okay, it could go to a lot.
It sure could.
It could go to 1 month's salary for someone. Who knows? But well, I'm just saying, don't play, because you will get hit with the fee, and I think they can charge you up to 12 months. Okay.
Yeah. So make sure you're filing on time, and understand, like, when you are filing the tax return that's due March 15, you can file an extension as well. When you file an extension, the extension deadline is also 1 month before the personal deadline. So what is it? September 15th is the extension deadline, and October 15th is the personal deadline when you're on extension.
But I do want to make it clear, though, just because you file the extension, that doesn't mean that you're not going to encounter the fees.
Yeah, that's true. So the extension is an extension to file, not an extension to pay. So the IRS still expects their money on the due date, but they still expect their money on the due date, but you won't get the penalty for not filing.
Right. So any other structures you want to talk about just real briefly before we conclude? I know we have C Corp and we have our not-for-profit organizations, but I think for what we wanted to focus on today were our small business owners. Yes, there are small business owners that when I say small business owners, I'm using the definition according to Small Business Administration, you all. But there are some that are C corporations. C Corp returns are due April 18th, you all. And once again, as we said, if you have a liability, it is due on the original due date. The IRS does not have any grace, any mercy. They're Department of Internal Revenue Service. So they're all about that revenue. They want to collect all of their coins. And I don't care if it's $25. If you are late on that $25, you best believe you will be hit with some penalties and some interest, and it could easily be $40. And you're like, but it doesn't matter. It doesn't matter, you guys. Okay, a penalty is a penalty, and late is late according to the Internal Revenue Service. So I always say to everyone, I prefer if you guys file the return. If you have a tax liability, deal with it head on. I don't even care if it's this 25,000, 50, 100,000. I say to all of my clients, file the return. You know that you're going to bed, knowing that at least you got that return filed, instead of going to bed saying, I got to get that return done. I got to get that return done. If you have an outstanding liability, work with the Internal Revenue Service to set up yourself on a payment plan.
Mm-hmm.
You know, they're about reporting the income. That's what they want to know, that you are going to report the income. And also, guys, when you're late filing with the Internal Revenue Service, it's like your credit report. It's a ding against you. It really is. You know, they look at all of those things. They look at the history. Do you file timely reports? Do you make your payment arrangements as you said you are going to? You know, did you open the mail? We didn't have to do a levy. You know, they look at all of those things. So be their friend, and they might be yours.
Yeah, be their yours. And I'll tell you, I've heard the IRS is somebody you don't want to play with. And I tell my clients all the time, listen, they are going to find a way to get their money. I know someone personally who a revenue officer came and knocked on their door out of unscheduled, unannounced, knocked on their door because they defaulted on their payment plan. So just make sure you do what you have to do. They're going to get their money eventually. So like Dr. Cozette said, file that return, make that phone call, set up that payment arrangement, and make sure you're working with a tax professional so that come tax time, if you're a business owner, you're likely going to owe, right? But what you want is to not be surprised come tax time. You want to make sure that you're filing you're doing your quarterly estimated tax payments, and that tax you're prepared for whatever that final tax bill is. It's not a surprise to you, because listen, you got to spend money to make money. As you make money, you owe taxes. We all pay taxes, but the goal is to minimize those in legal ways, and in ways that you're entitled to. So just make sure you're working with a tax professional to help you out, so that if the situation is bad now, let's make sure it's not bad going.
Right. Well, guys, this has been a very interesting conversation, thriving conversations. Khadija, where can they follow you at?
You can follow me at miss.moneyhoney on Instagram. Money is spelled like money. Honey is spelled like honey on Instagram. I'm also on Twitter. I don't know my Twitter name, but Miss Money is where I am the most active. If you're interested in working with me and my firm, all of the information is there as well. Or you can go to moneyhoneyfinancial.com. That's where you'll see all the services that we offer, our price list, our lead generations for you to set up calls with us and get the process started.
All right, guys, you heard it first. For me, you can follow me on all social media outlets. I'm at Cozette M. White. On YouTube, I'm at Dr. Cozette M. White. And for my tax professionals who are on the line, on the live, my CPAs, my enrolled agents, I want to invite you guys to Thrive Live. This is a conference designed by a tax professional accounting who's been in the service, who's been in the industry for years, you guys. I have well over 20 years in the industry serving clients, as well as educating, empowering, and inspiring our tax industry. I invite you guys to join me at Thrive Live. You'll have an opportunity to earn continuing education hours for the Internal Revenue Service. We are a IRS service provider, so you will get those hours on day 0. We will be helping you grow your business. We're talking about our mindset. We're putting strategies together to help you reach those goals that you have set for 2023 and beyond. Listen, one thing that I do know is so many of us get stuck on our pricing. I am a beast when it comes to the pricing. We're going to be talking about pricing, packaging, and proposals, as well as our messaging. If you guys are tired of getting the same clients that you get over and over and over again, even though they help you grow your business, but you're tired of them, so you say, I'm going to help you with that messaging and that marketing so that you are talking to your ideal client to get them through the door. And last but not least, we're going to spend some time working on leveraging with our systems and our automation. I don't know about you guys. I've been in business for myself for a while. I've been virtual since 2006. So I was able to survive pandemic and not go through the struggle of wondering how I'm going to get clients to send their information to me. We had already had it together. Yes, we tightened up some nuts and bolts because we went 100% virtual. But I want to make sure that you guys have your systems in place so that you are gaining back your time, gaining back your freedom. I don't care if you're at 100K, or I don't care if you're at 1 million. I don't care if you're at 3 million, 5 million, whatever that number looks like. I've talked to enough of you that says you wish that there was some way you can gain back your time freedom. Time freedom is important. Stress is important. Burnout is important. If you're worried about getting all of those, or even if you're stuck and you're not sure where to go, you need to be at Thrive Live. All you got to do is click the link above, you guys. Click the link in my bio. Thrive Live is right here, Los Angeles, California, you guys. Come on, there's a lot you can do before the conference or after the conference and make it a vacation, a rest and relaxation, all right? If I'm talking to you and you have questions, just drop in my DM. I'll be more than happy to answer any questions that you have about the event, or if you need some education. That's what I'm here for, to help our tax professionals, enrolled agents, and CPAs. It has definitely been a pleasure, Khadija. I so appreciate you all the way in Philly. I don't know how the weather is there. It's been really weird here in California. We've had some rain. We've had some snow. You look at my patio, you just see the snow on the mountains, but it's beautiful. It's unprecedented times. But thank you again. I know we got work to do because I was doing some before I said, oops, it's 2:30. Let me jump on this live. So thank you so much from the bottom of my heart, and have a phenomenal tax season, okay?
Thank you so much, and thank you for having me. I really appreciate it.
You are welcome, and congratulations on 1 year.
Thank you.
All right. Take care.
Bye.
Bye-bye.